Intro music. Host, hello, Spy Trader listeners. Welcome back to Spy Trader. It's your host, Chuck Bucks, here to unravel the mysteries of the financial world with humor and market wisdom. Today is August 30th, 2024, and it's exactly 12 p.m. Let's dive into the markets today. And remember, how do financial analysts party? By raising capital. Chuckles, upbeat music transition. Host, first up, let's tackle the news highlights. 1. Market performance in August. Stocks enjoyed a rally this month, but have fizzled out as we edge towards September. The S&P 500 is setting up for a fourth consecutive monthly gain. But let's remember, September has historically been a downer for equities, with average declines of 0.7% since 1950. 2. Fed rate cut expectations. Investors are eagerly awaiting next week's employment data, which could determine potential Federal Reserve rate cuts. We might see a 25 or even 50 basis point cut if conditions align. 3. Defensive behaviors in play. As vacation days wrap up, a defensive stance is the flavor of the month. Historically, September has produced notable losses. Mutual funds might sell off stocks before the quarter's end. 4. Economic data observations. Consumer sentiment data has improved thanks to slower inflation and optimism around potential Fed cuts. The Fed's preferred inflation measure, showing a mild increase, has eased recession fears, boosting equities. 5. Corporate giants in focus. Intel is discussing restructuring. Meanwhile, Dell's impressive AI sales have boosted their numbers. On the flip side, Lululemon and Ulta Beauty have lowered forecasts due to competition and cautious consumer spending. Transition music, host. Okay, time to dive into the meat of the episode, analysis and insights. Analysis and insights. Navigating September calls for caution, dear listeners. Historical trends suggest potential market shifts. The Federal Reserve's upcoming decisions based on employment data are crucial and could significantly sway market sentiment. The tech sector presents both challenges and opportunities. Intel's restructuring could lead to growth if executed well. Dell's success with AI highlights opportunities in tech aligned with current trends. In consumer-facing businesses, spending pressures loom. Big names like Lululemon and Ulta Beauty cutting forecasts signal potential volatility. Insightful music transition. Host, now onto trading recommendations. Trading recommendations and reasoning. 1. Tech sector opportunities. Consider bolstering your portfolio with A-driven stocks like Dell. Positive earnings and AI sales make them a solid bet. Keep an eye on Intel. Restructuring moves could set the stage for growth. Number 2. Defensive stocks for September. Lean into defensive stocks like consumer staples and utilities. These sectors have traditionally weathered market downturns better and could offer a safe haven from potential volatility. 3. Evaluate consumer discretionary exposure. Reassess your exposure to discretionary consumer businesses like Lululemon and Ulta. Tightening consumer wallets suggests potential retraction, so it might be wise to seek more stable sectors. 4. Keep an eye on Fed announcements. Be ready for action post-Fed announcements. Rate cuts could inflate stock values, making it a great time to re-enter riskier assets if economic data aligns favorably. Closing music, host. That's a wrap for this episode, folks. Stay savvy, stay safe, and remember, only invest what you can afford to lose. Tune in later for another dive into the financial seas. This is Chuck Bucks, your financial navigator, signing off. Until next time on Spy Trader, keep your portfolios prosperous and your charts green. Goodbye. Outro music fade out, end of podcast.